This conference will now be recorded.
All right. Well, everyone, good night. Let's restart that.
This conference will now be recorded.
All right. Hello, everybody. Hope you're all having a good night. My name is Tony Vertle with DePaco here, and this is our fourth webinar in this series here. And this one is just kind of really an open discussion. We brought in a little extra ammo this evening. We have Crystal with us, so there's three of us to be able to answer your questions, and I will let those two introduce themselves, and then we'll kind of see where we go from there.
Hi, everybody. I'm back with Tony again. I'm Sloan. I'm also on the Community Outreach and Education team here at DePaco with Tony. And like he said, we've also got Crystal joining us tonight for our panel. So I'll let her introduce herself as well.
Yes, thanks for having me join you tonight. My name is Crystal Trotter, and I'm also on the Community Outreach and Education team, but I am in the Marion Cedar Rapids region. So I'm happy to be here tonight.
Yeah, that's kind of fun. I didn't think about that. We didn't say our regions, but we are representing kind of three different regions of DePaco here. So I'm in Dubuque, Sloan is in the Cedar Valley, Waterloo area, and then Crystal in the Cedar Rapids area. So just shows the coverage that we have. And then we also have team members all the way in Des Moines. So we really cover the state of Iowa, and we also do Illinois and Wisconsin. We get to go out into the communities and work with different employers. So it's a really cool job that we have. Well, let's get started here. We do have a few questions from people that were not able to attend this evening. So I will kind of read off the first question here, and it's kind of it's a good one. It's a thought-provoking question, and then I'll see if one of you two want to answer it. So the question says, I'm not really sure, but I'm having financial difficulties, and I used to be able to budget and make payments on time, spend money wisely. But the last few years, I've gotten increasingly difficult with my spending habits. I think it's because I don't have the ability to get things we need for our family, and then when we do, the money seems to go quickly. I spend unwisely thinking about today and not about tomorrow. So do either of you have any thoughts, comments on that? That's a great comment question.
I can kind of start off, and then Crystal, if you want to add in. I mean, I think that that's something that we hear about a lot, where your budget or your income is covering certain expenses, but then life happens and suddenly, our expenses have changed or our spending habits have changed and our budget doesn't necessarily keep up. My response to that would be, if you haven't sat down and either implemented a budget if you haven't before, or sat down and compared your previous budget to where you are now and kind of gone through the process of updating your budget, I think that that's a really good place to start. I mean, your budget is something that's most likely always going to change no matter who you are, because prices of different things change, cost of living changes. There's so many different factors that truly go into a budget, and a lot of them are things that you can't really control. You can't control if your utilities go up in a certain month, or if you moved, now you're dealing with different cost of living prices, whatever it may be. So I would say a good starting point would be to truly sit down, evaluate where your money is going. So pull your recent months worth of transactions and look at everything. And then really try to figure out, what are the expenses I need to cover? How can I give my dollars a purpose? And go from there and try to see if you can create a budget that's going to match your current needs. Crystal, do you have anything that you kind of want to add into that as well?
Yeah, no, I think that's all great. And if the person that submitted this question also saw your budgeting and saving presentation, or at least when there was times when you guys went over that, that is a great place to start as well. Don't feel like you have to do this alone. DePaco is here for you, and we have money makeovers that are free to all of our members and non-members. We are truly, it's our job, and we enjoy coming to our members and saying, hey, let's walk through this with you. Let's walk hand in hand through your budget. Because maybe one way that I do my budget isn't a way that's going to work for you, and we can work through that together and find a solution. And then there's so many different, this one question could go in so many different ways. with all the solutions that we have at Dupaco. But definitely let us help you. That money makeover is free to anyone, and you can schedule online. You can contact Dupaco through email. You can contact Sloan or Tony directly. We can definitely help you out with this.
Love it. Definitely agree with you guys. You made some great points. I think the key to it is just know you're not alone. As both of you said, we're here to help you, and that's the best place to start. Member, non-member, either way, Dupaco is a financial blanket for you. So, did you guys see any other questions that had come in before?
I did see one come in just now from Nancy, and she just asked, what's the difference between a debit card and a credit card? So Tony, do you want to take a stab at answering Nancy's question?
Yes, thanks for asking that, Nancy. That's a question that a lot of people may not know the difference to. There's different ways to run a debit card, so it might be confusing. So your debit card is really attached to your checking account. And then also your savings account if you're looking at getting money out of an ATM. So that card is something attached to your money that you have from week to week that shows up in your checking account. And really that's all it's there for. It doesn't, you don't ever want to overuse that card. You don't want to go negative with that card. It's not something that's supposed to be used beyond the money that's available in your checking. So there are two different ways to run the debit card, and I think that's where people really start to get confused. There's the debit side of the card and the credit side of the card. So what does that mean, side of the card? So when I'm saying that, when you're running a debit transaction, that's when they ask you for that PIN number. So let's say you're at the grocery store, you buy $150 worth of groceries. For a family, that's probably cheap. Go back to your budget, right? But so that in that case, you're gonna put in your PIN number, that 4-digit code that you know. That transaction is immediately gonna come out of your checking account because it has verified you by using that 4-digit PIN. I highly, highly recommend anytime you can to use your PIN number, because then that money comes out right away. It's not floating in what's called a hold or a transaction hold. So then the flip side of that is when you run the credit side of your debit card. So that's if you go out to eat, you have a nice dinner, and you go to sign it, you're putting your signature, your tip on there. They had to run it through the credit side of the system because it's a signature transaction. And that gets put on hold typically for a couple days. So it's just how the debit card runs through the MasterCard Visa system. There's a debit side and a credit side. So they just have to verify that transaction that has a signature on it and also add if you put a tip or something on that. So that's why it takes a few extra days. Unfortunately, a debit card does not have anything to do with your credit. So it has that word credit in it when you do the transaction that way, but it does not affect your credit score. It has nothing to do with that actual credit score. It will not build it in any way. So, and then Nancy asked, and so what is the difference? So that credit card then is really what comes in and helps you do the transactions that will help your credit. You put money on it, you pay off, you borrow, you pay off. So it's a revolving line of credit for you. And one last thing, I don't mean to be too wordy here, but there's one huge difference that I love to let people know about. When you use your debit card, you're spending your own money, as I mentioned, out of your checking account. When you use your credit card, you're spending, in our instance, Dupaco's money, because you borrow money until you pay it off. So that comes in handy if you ever have fraud, or if you need to do something like rent a hotel room or a car. A lot of times those places will put a hold on your account for a couple $100s, and then you're out that money in checking until you leave that rental and they refund you the money. Or in a fraud case, you're out of that money in your checking account until it gets taken care of with the fraud investigation team. So we really recommend trying to use a credit card if you're comfortable with it until you, that way if anything negative happens, it's Dupaco's money. You guys have anything else to add? I was wordy.
No, I think that you had a great answer to that. And we actually answered as well Leslie's follow-up question to Nancy about using a debit card as a credit if it would help build your credit. So we answered that one as well. But I did see another question come in. Leslie said, I have some debts out there and want to work on paying them off. A few people have told me different ways to do that. What do you think is the best way?
I can start that. answer, and then I'm sure Sloan and Tony will have things to mention as well, because this is another question that we get often. And just like anything, it's customizable to you and what works best with your family. Now, there are a few ways that work best for others, or best than others. But one of them is I always call it snowball, but technically I think it's called avalanche, where you look at all of your debts and you start with the debt with the highest interest rate. And that means that all of your other debts, you're paying at just the minimum amount, but anything extra that you have, you're applying to that loan with that highest interest rate. So it might take a little bit of time, but then after that, it's really gonna avalanche down, and you'll see it go by fast. The snowball is with the lowest interest rate, and you're going up to the highest interest rate. So some people like that because maybe you had that highest interest rate is a huge loan, so it takes a little bit longer, and we are human and we like instant gratification at times. So sometimes it's just nice to see that you finally paid a debt off, and so that's why you might do the smallest. Another one that I recently learned a little bit more about is the effectiveness of looking at your payments too. So I know in my household, we were doing the interest rates, and we actually switched our method to the highest payment, because it's just more money in our checking account at the end of the month when we're paying off a full debt. And for our situation, that makes sense. For your situation, it may not, but there are a lot of different ways. And because I keep miscalling things and making people probably confused, I'm gonna hand it off to Sloan and Tony with any other ways to help pay off your debts.
Yeah, I think that that's a great starting point to answer that question. I definitely get this one a lot as well. And I feel like I definitely get this question more so when people are looking through their credit report and maybe they see, for example, like a medical bill they didn't realize was out there, or, whether it was like an unpaid utility. And a lot of times they don't realize that it's out there and it was from so long ago. And so they'll say, how do I even go about paying this now? And so if that ever happens to you, just know you can absolutely call the agency or whoever the debt is through. And typically if you call them and you say, hey, I just saw in my credit report that I have this balance out there, I want to take care of it, typically they're going to work with you to set up some type of payment plan, especially if it's a larger amount. If you're calling them, they're not going to say you need to pay this in full typically. A lot of places are willing to work with you to set up a payment plan. So just keep that in mind if that does happen, because it's easy, to miss a medical bill in the mail and then see it, later on your report. That's something that we commonly see. So just keep that in mind. If you're ever in that situation, payment plans can be set up. And if you ever have questions about something that you do see out in a credit report, and you didn't realize it was out there, you're not totally sure kind of how to go about tackling that, let us know, and we're happy to kind of talk strategies with you as well. Tony, I don't know if you have anything else to add with this particular question either.
Just one more thing. You guys hit most of the points. I just was going to mention, especially the time of the year it is, people are getting these awesome tax returns. I know I'm in the process of getting mine back, and boy, I would love to go buy a new TV, and I also, want to go maybe get some rims on my car since I'm a car guy, whatever it might be, whatever you like to do. But this is a perfect time to look at what you got out there in debt. Maybe you're getting a good chunk of money. You got a couple kiddos, you're getting $4,000 or $5,000 back. Look and see what debts you have out there, see if you can knock some of those out. Perfect time to be doing that. One last thing with those collections too, if you got some smaller ones out there, use that tax return. A lot of those places will negotiate with you. They're not the place that actually holds the debt. They have been sold to this collection agency, these debts. So they want to get them paid off and off their books, and they actually, make money off of that. So maybe if you got a $400 collection, tell them, hey, I got $200 to pay this off right now. They'll probably work with you. They probably won't take that, but they might take way less than $400. So you don't have to necessarily give them the amount they're asking for. So just something to think about if you do need to call those people.
No, I think that that's an excellent point to make, Tony. I kind of forgot that tax season is upon us, but yes, that is an excellent way to start tackling some of those debts as well. So thank you for bringing that up. If you have any more questions, keep popping them in the chat. Otherwise, I know a common one that I think I hear almost every single week, just being out and about, and I'm sure Tony and Crystal could say the same. I get asked a lot, what is the difference between a bank and a credit union? And I think that this is so, so important to know. So we kind of just wanted to cover that as well. And I think we've also covered this in some previous webinars, but really the difference between a bank and a credit union, the main one for me is that a credit union is a not-for-profit financial and banks are for-profit. And so what that means is when you're structured as a not-for-profit, instead of all of the profits, like at a traditional bank, going essentially to a group of shareholders, what you're going to see is that those profits go back into the organization and essentially back to the members. We say that we have member owners, and so really those profits are going back to them. And we see this in the form of more competitive rates. We've got member give back programs to get value back to the members, such as our thank yous program, among other things. So that's probably the biggest thing. But there are so many other reasons as well. Another one that stands out to me is that when you're at a credit union, the board of directors or those that group of directors, those are all volunteer-based. They're there because they truly care about the members at the credit union, and they are there because they care about the mission. Typically at a bank, that board of directors is going to be entirely paid out positions. So you're going to have volunteers at your credit union. And I think that shows through really well. We definitely see how well our board of directors cares not only about our members' well-being and about the programs and the ways that we serve, but also as employees, we feel that as well. I know that those are two really key pieces of information, but Crystal, Tony, do you have any other differences between banks or credit unions that you think would be beneficial to bring up?
I think you made some great points. I mean, we could go on to quite a few different things. I mean, you know, it's really personal choice for a lot of people. I always say give credit unions a try. We're here for you. You know, we make that personal touch, that difference. And I think, you know, once you join, you'll see that. We hear it from a lot of our members when we're out and about. So give us a shot if you haven't, and see what we're all about. So do have one good question here. We don't have anything in the chat right now, so we did have one come in. Looking here, what do I need to buy a house? So I think someone just kind of starting out, where do they start? What do they need to do? Either Crystal, looks like you're ready for that one.
Sure. So one of the first things that we will direct our members to when they are thinking about buying a home is first just getting your finances in order. So come into DePaco, do that money makeover with us. Let's talk about your savings goals. Let's talk about how your budget is. Then we'll really look at your credit as well. And Tony and Sloan, I've been questioning myself lately this week. At DePaco, do we often look for a 620 or a 650 credit score?
As far as I know, that 650 is the number that you want to be at.
Thank you. So we'll guide you through that too. If you are not quite to that mark, then we've got lots of different ways to help build your credit. Same with that savings goal. We want to make sure that you have at least 3% down for your home purchase. And again, don't fret. We have lots of ways to help you get there too. Then once we are there, then we'll kind of start getting you to that pre-approval spot. So we'll get you in touch with one of our mortgage lenders. They will help say, okay, Tony, we'll approve you for a $100,000 home. And then you can go out there and start looking for your dream home. And I know when my husband and I were looking for our first home, that was so reassuring to know that I knew I was looking for a home that was not only going to be a sound purchase, but also one that was going to fit our budget and that we weren't paying crazy amounts each month. I also really liked that I knew that DePaco had our back throughout, from the moment that we started the process with that money makeover to now, I think it's about 3 years in our home, and DePaco is still taking our payments. They're servicing our loan. They are here to answer any questions that I have. So I know there's quite a bit that I missed in the process for what you need, but that's kind of an umbrella overview, I think, if you guys want to mention anything else.
I think that was a really great overview. One thing I will mention, I know you kind of started to mention this too, Crystal. If you're not at the point where you're able to start kind of down the road of buying a home and getting a mortgage, let's say maybe your credit's not high enough, whatever it may be, we do something at Dupaco called a mortgage makeover, where if you're not at that point, we're not just going to say, you know, come back to us when you are. We truly want to work with you and sit down and look at your entire financial picture, and we'll say, okay, what do we have out here? Where are the areas for improvement, and what's our game plan to get you to this point? Because we do want to help you, you know, achieve those dreams and get into your dream home. So even if it's not possible at that moment, please don't feel like you can't come in and talk to us about that. We're never going to push you out the door. We truly, like we said, want to spend time with you and get you to the point where you are ready for that. So just kind of keep that in mind. Don't let that scare you away from trying to buy a home, because it may be a few simple things that we just need to work on, and then in a matter of months, you might be ready at that point. So please feel free to come in and chat with us if you feel like you're in that boat.
Yeah, I'd like to add just a few more things kind of to bounce off what you guys were saying. First, I think a lot of people, what do I need to buy a house? There's a lot of documentation, but that's not something we need to go over today. Just call us, we'll help you through that. The second thing is you'll get pre-approved for an amount, and kind of what Crystal said, look at your budget first. That's, you know, just because you get pre-approved for a $300,000 house, that may be what's important in your life. You may want that $300,000 house. It's what's affordable for you, whatever the case may be. That's great, but also remember that may be your max. So maybe you don't have kids yet. Maybe you want to have a pet. You know, you have a beater car and you plan to get a new car in the next year or two. Those are all added expenses that aren't included in this home purchase. So a lot of lenders will, in not speaking of Dupaco, but a lot of lenders will tell you what your max is, and then you think that that's what you can afford. That's not necessarily the case. So just kind of be on the watch on that. Be very careful on what exactly you're borrowing for an amount. So and of course, the other thoughts are fleeting out of my head of what I was thinking about. So we can certainly move on to the next question. When looks like we actually have one from Leslie here. So she said, how do I look up my credit score? My brother uses Credit Karma, but it makes me nervous to put my personal info, like my social security number, onto an app. Awesome. Yeah. Sloan, are you interested in kind of taking that one?
Yeah, I think that that's a fantastic question. So I'm glad that you brought that up, Leslie. There are a couple of ways to kind of track your credit score. One, you can use a site like Credit Karma or a similar site. I know at Dupaco we have BrightTrack. And you're not alone. A lot of people do feel nervous about entering in their information to try to track it. Using a soft pull site like Credit Karma is a good way to track that progressively. We recommend using something like BrightTrack only for the purpose of sometimes those free sites that are out there. The reason that they're free is because they'll sell your information. So you want to be kind of careful about what site you actually go into to track your credit score. But if you use something like BrightTrack, what it's essentially doing is estimating what your credit score is based on the information that it has available to them about you. So it's going to kind of give you an estimate or like the range of where it truly thinks your credit score is. And sometimes that's pretty close to where your actual credit score is, but we have seen instances where it can be really far off as well. So it's good throughout the year to use a soft pull site like that to just kind of monitor where things are going. But we do recommend at least once or twice a year doing a hard pull on your credit. And it does impact your score a few points. But what that's going to allow you to do is to truly see first where your credit score is actually falling, especially if you're kind of gearing up to do a big purchase. If maybe you're wanting to get an auto loan or go for that mortgage, it's going to tell you truly where you are. But you're also going to be able to see specifically what is on your actual credit report. And that's so important because it'll kind of show you some of those things when you're on a soft pull site. But seeing it out there really tells you what's out there. And we've had members before that have looked at their actual report and realized that there were fraudulent trade lines or lines of credit out there that they had no idea about. And had they not done an actual hard pull, they would have never seen that. So even though it does impact it a few points, it really is important to do that at least once, maybe twice a year. And you can space those out so it's not dinging your score all at once. But then in the meantime, doing that soft pull to monitor, your progress or where you kind of might be. And I don't know, Tony and Crystal, do you have anything to add if I missed anything on that?
I think you did a great job of explaining that. That was great. I will say we're at about a half hour right now. So maybe if we can just answer one more question. There were a few in here. There's one that I specifically, I think is one that as a panel, we can each kind of give our own answers on. And so maybe I can toss this out to one of you and then all three of us can answer. What do you guys see as the biggest error that people make with their money? So like what do people do? What mistakes do they make? Just as kind of a general idea. Crystal, we'll start with you and then just go down the line, Sloan, and then I'll go.
Yeah, I actually just got this question this past week. And I think truly it goes back to that budgeting piece and having that awareness of where your money's going. I was on a walk with my husband this afternoon and we were talking about how it seems like we blinked and then all of our paychecks just seem to be in la la land right now. So this weekend, you can bet that we're going through our budget and we're looking at each transaction of our bills checking and we're saying, where is this money going? So I think that oftentimes we do a budget, but then we don't maintain it. And then 6 months goes by and things have changed. And if it's around that Christmas time, of course, your gift budget is going a lot faster than it would if you probably maybe you have a lot of gifts to give all year round, but there are different times of the year that your budget is going to change for different reasons. And I think that if everyone really put a lot of effort into tracking and making sure they were just aware of where every penny of their income was going, then we would just have a better handle on things and be able to kind of look at your goals and be able to see the steps to those goals a little bit easier. So I really encourage, even in my own household, trust me, like I said, we're doing it this weekend, but really encourage that budget for everybody.
Yeah, I think budgeting was definitely on the top of my head as well. So I'm so glad that you brought that up, Crystal. And I actually have two things that come to mind besides that. I think one that I hear a lot is that people think, I just don't make enough money to spend, or I have enough time, I don't need to spend right now. But even if it's only a few dollars a paycheck, whatever it may be going into an account, that's something that adds up over time. And then over time, you're going to be able to take advantage, hopefully, of some interest as well. And part of that does go back into budgeting for sure, but we hear a lot of people say that they just don't feel like they can save. And we've worked with so many people now that we know that that's not true. And so if you're kind of wondering, how you can start saving, or if you felt like that, but you want to get better at saving, just know that we're here to help you kind of evaluate your budget, figure out where the wiggle room is or how we can get you on that path to start saving. But that's one that comes to mind for sure. And then I think, honestly, a mistake that a lot of people make is that they're just so afraid to talk to somebody about their finances, or they assume, well, I'm not in a position to have X, Y, Z. I'm not in a position right now to get a mortgage or be approved for this loan, or I'm not going to be able to get my credit score up, whatever that may be. And so then they kind of just sit in silence and they don't ever share that. But we've worked with so many people that have felt that way. And then after just doing an evaluation of their credit score or looking over their budget, we realize that's not the case. And so if you're kind of feeling like that, just know that you're probably not alone, but no question is a dumb question. When we say that we want to spend time with you and truly look over your financial picture, even if you're not a member with us, we're happy to do that. Our goal here is to help everybody feel financially confident and secure. And so please don't ever assume that you can't come and talk to us about something. Never shy away from that. Even if it's not attainable right now, if you've got goals and dreams, we want to hear about that and figure out a game plan to get you there. So just kind of keep that in mind, but don't make that assumption about yourself, because chances are it's not true, and you can still reach those dreams. So that's what I would say. What about you, Tony?
Well, first of all, 2020 happened, which threw a little curveball in there for everybody. geez, even in my household, my wife works in the medical field. It was, hours dipped. She wasn't making the money she had been making. It's difficult. We preach budgeting a lot, and that's absolutely fantastic. And I think that's the number one key. But life events happen, and they get you behind. It's going to happen at some point, whatever that may be. And it's great if you do have a nest egg, but unfortunately, a lot of us don't. So, that's also where we come into play. Don't use those, if you have those high interest credit cards that you had to use, or maybe you had to take out a payday loan, however you needed to get through that last year, don't feel ashamed of it, first of all, because you are absolutely not alone. And just let's find a way to get you out of that. So maybe right now you don't have the best credit. Maybe, some of those bumps were late payments, but, we can help you get those payments back on time. And then hopefully, as we had talked about earlier, some sort of debt consolidation would be a great way to kind of get your head above water. You really got to see that light at the end of the tunnel. And I think that's a huge piece of starting to feel a little bit more comfortable with your finances. And there are a lot of pieces that go into it, but making sure that your debt is on track is really one of those big pieces. So I think that's, I think we all had great, our own outlook on what to do. And I think all three were correct. And I think they can all work together and, make that outcome and that future better for you. So we did have one last question. I did want to bring this in here. I had it pop up. It was a chat sent to me. So somebody had a question. This is kind of off subject from what we had been talking about, so I can just answer it very briefly. They said that they, wanted to know when to use their personal name versus their business name with their finances. So that's a good question, because a lot of people, once again, we're talking 2020, they had to find supplemental income, whether that be starting to sell Scentsy, or maybe they got a job with a delivery service or Uber or something like that. So when do you kind of start to separate that from personal and business? And that can be certainly a tough question to ask. That's something that a tax professional, I would highly recommend getting involved if you're really starting to question that and make a lot of income. But also it depends on if it's your main source of income or not. And then what kind of liabilities that you may hold. So there's a few things there. As far as liabilities, if you're a construction company, or you're doing something where you may have insurance and you don't want to be held personally liable, that's certainly something I would look at getting into an LLC or a business partnership, something like that, where you're not personally held liable. So that's one piece of it. And then you're going to want to start, using your business account that direction. And then the other piece of it too is if you need to show this income for, once again, if you're looking to purchase a home and you're using Scentsy and you're, this awesome Scentsy person, and you're making $1,000 a month on that, you're probably going to want to show that as income. So that may be something that you need to pay taxes on, which you should either way. And you might need a business account for that. So there's a lot of different avenues. We do have a great business department that can certainly help you out. And then also I would consult a tax professional and potentially a lawyer. So there's a lot involved once you start going down that path. That's all I have for you guys, unless you saw anything else pop up at all. Sloan, you do a wonderful job of intro and outro, which this week I did find out through definition that outro is a word. So Sloan, you got anything for us?
Well, you're correct, Tony. Outro is a word, and I've used that before too. Well, we just want to say thank you so much for joining us tonight. I know this is a topic that's different than what we've usually done, but we think it's important just to be on hand to answer whatever random questions that you have and to be accessible for that. So we're really happy that you joined us. And if you think of any other questions, after the webinar, or, if you watch the recording and it sparks some questions, please feel free to reach out. You can certainly, call or visit a Dupaco branch, or please feel free to reach out to Tony, Crystal, or me. We'd be more than happy to have a conversation with you and to answer some of those additional questions. But that's everything that we had for tonight. So thank you again for joining us, and we will see you when we do a next webinar. This is our last one in the series, but yeah, thank you so much for being with us tonight.
Thanks, everybody.